out of this chart, you will see that, what will you see? You will see that the chart, these candles were going down. Look at, it was going down like this, right? It was going what? Down. Then what happened? What happened? From this point here, from here, from this zone here, from this verified sub, from this place here, what happened? It was going down, then you say what? Going what? Up from here. So just looking at this chart without even looking at my RSI, I can clearly tell that what? I mean, what? An uptrend. And if you notice, if you do what? Notice, you see that this is a verified support. Can you see? There's like a low. What did we say about an uptrend? An uptrend is a series of what? Higher lows and what? And higher highs, right? A downtrend is a series of lower lows and what? Lower highs. Now look at this downtrend. This is a high. This is another high, lower than this. Lower high at all these resistance areas. High, lower high, lower high, lower high, lower high, lower high, lower high, until it came down here and started going up. Now look at supports now. This is low. This is a low at this support. Low, higher low, higher low, higher low, higher low. Can you see that right now we are what? In an uptrend. Now I can zoom out and decide to link these lows together. I can decide to come here and link this low, or even link this one. I can link it to this present one here. This low here, this one here. Can you see it? This one here, this one, this one. Or I can link it from even from here. I can link it from here. I can link it from here. I can even link it from here. Okay? I can link it. I'm linking the lows, right? You can see that where this particular low is. Look at this one here. Here. There's a low here, right? Can you see it? This one. I can even link it from here. Look at, because this is a low, but this low is higher than the previous one, right? This low is higher than, sorry, this low is higher than this one. And this current one is also higher than this previous one, right? So low, 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 low. As the lows are coming up, the trend is going up. If you want to see it, zoom out. Sometimes it's good to zoom out. Zoom your chart out so that you can see it well. It's like saying that you are on a street and then you climb up so that you can see the street well. You see things well from a bird's eye view. When you go up, the higher you go, I think the better you can see some things. You can see some dangers, right? If maybe there was somebody coming from another street that is trying to attack you, you might not see them, maybe unless maybe you go up or something like that, right? So what you want to do now, drawing this trend line can be tricky. So you need to know how to do it, right? I just zoomed out. Let me cancel this trend line. If you zoom out, you can clearly see those lows. There's a low here. Look at, there's a low here, right? There's another low here. There's another one here. There's another one here. Now there's a recent one here. So if I link those lows, that would be what? My uptrend, right? This is a high. This is another high, lower high. A downtrend is a series of what? Lower highs and what? Lower lows, right? You can see it. You can see it, right? There's another one here. There's another one here. So it was coming down, and at the point it started going what? Up, right? Now, the first thing I did was to identify my what? The trend. You want to know what the trend is what is saying. you want to know what the trend is what saying. So I have established that my trend is what? Upwards, right? Do you understand? So I know that I'm looking for what? For buys, right? But I also know that in these buys, look at what is happening here. Look at what's happening here. So the market will go up, form, can you see lower lows? This is a high. Look at this. High, 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 right? High, high. An uptrend is what? This is the low. An uptrend is a series of what? Lower highs and lower lows. A downtrend is a series of what? Sorry. An uptrend is a series of higher lows and what? And higher highs. While a downtrend is a series of lower highs and what? And lower lows. Look at this downtrend here. Look at it. Look at this. Just look at. Can you see it? Look. Can you see? Zoom out so that you can see it clearly. Zoom out. Sometimes you just need to zoom out. Right? We can see it, can't we? So in a downtrend, you should be looking out for sells. In an uptrend, you should be looking out for what? For buys. Now, the issue is we want to draw a trend line to connect all of these things. But the problem is, how are we going to know where to draw this trend line? That's the issue. How? How do we know where to draw the trend line? Trying to get to so that I don't confuse you guys with all this my drawings that I have here. Okay. All right. So trying to draw the same US 2000 twice. Follow me. I'm trying to be as slow as possible. I don't want to talk too fast so that you don't get lost. We are still in where we are trying to identify the trend, right? We are trying to identify the what? The trend. So we have established that this trend is what? Is an uptrend, right? This is the same US 2000. This is where I have drawn all of those things. This is the same chart here. Now, we know that it is an uptrend, right? So what I can do is to do what? Is just to connect. I can do what? I can connect the recent low with what? A higher one. Now, first of all, I don't know if this is going to be the low. Now, this is where an issue comes. Now, I'm going to show us something. I'm going to show us something real quick. Now, I know that this is a low. I know because it has formed this low and then it has gone up, right? But this candle has not formed the low yet. Although it is looking like it might form it around this area, but we don't know. We don't what? We still don't know. This is where we have an issue. We don't know. Now, one of the ways you can use to know where it might likely do what? What are we looking for here? What are we looking for here? Let me try and get let me try and get a board. So what are we looking for? In an uptrend, where we are presently in that US 2000, we've done this, we've gone down, gone up, right? And at each place, you see like a support pushing the price up, right? There's a support that keeps pushing the price up. If you look at your charts right now, that is what is happening. If you look at your chart right now, that is exactly what's happening. Look at it here. Up, retracement, impulse. Impulse is the move, it will retrace. Another impulse, retrace, impulse, retrace, impulse, retrace, impulse. Now it is retracing. One thing that you will probably observe is that whenever there's one thing that we probably have not noticed is that normally the impulse is usually what? Smooth. Then the retracement will be jaga, like just like this, right? Then another impulse, smooth impulse, then just, just Yama retracement, then impulse, retracement will be noisy, impulse will be smooth, retracement, noisy. Impulse smooth, retracement noisy, impulse smooth, retracement noisy, smooth, retracement noisy, smooth, noisy. Now that is where we currently are. If you check, that is where we currently are right now. Look at the impulse here. Can you see how smooth these impulses are? Look at it. Look. Smooth. Look at the retracement, a bit noisy. Smooth. Can you see? Smooth. Noise up and down. Look at smooth. Look at noise. Smooth. Noise. Right? Smooth. Noise. Okay? So what we are trying to find out now, where we are presently is on a retracement. We are presently at a what? Retracement. It means that we have an impulse. Now, there's a retracement, but we don't know where the market will likely do what? Go up. Is it here? Or will it come further down and do from here? Or will it come further down and do from here? We don't know. We do not what? Know. But I want to ask a question. Real fast. I said these are areas of what? Support. This is resistance. Whenever price is going up and comes down, I want you to know that there was a resistance that made it come down. If price is going down and it comes up, then there was definitely a support somewhere that pushed it what? Up. Right? Yes. Now, if you look at this chart, you will clearly see that on my 1 hour time frame, there is a support somewhere here. This is a support, right? Okay, so let me go back to the strategy. I said the first thing you want to do is to do what? Is to identify the time frame you want to trade. For me and my family, we have decided that we want to trade on the 15-minute time frame, and that we want to use the 1 hour time frame to establish or to know what the trend is. If the trend is upward, if the trend is up on 1 hour, I am going to I'm going to 15 minutes and maybe sometimes 5 minutes every once in a while to go and look for where I will place a what? Buy. I am buying on the impulse. There is impulse and there is retracement. There is what? Impulse and there is what? Retracement. This is an impulse. This is a retracement. The impulse is always kind of smooth. The retracement is always kind of scattered. Impulse, retracement, impulse, retracement, impulse retracements. This is the area where you should be looking to buy. Here, 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 right? Okay. I've been drawing this thing for a while now because I want us to understand. Now, if you look at this thing clearly, you will see that there's been an impulse, there's been a retracement, there's been another impulse, there's been another retracement. Okay, let me just look at it here. You can see, right? Impulse, retracement, impulse. This is, if we trace to this point, so this is where you actually should have bought from. Then you bought here, then you retraced again to this point. You can see it is retracing off a support. You could have bought from here all the way to this point. If you trace down to this point again, another support, then you bought from there all the way to this here, came down, retraced again to this support again, bought all the way to this point, and now it has come down again to another support. As somebody who did mathematics and who did probability and logic, I mean, mathematics is 1 + 1 = 2. With what I'm saying here, I know that I should be looking to buy at somewhere around here. But the problem is that we don't know whether this candle will go below this verified support and maybe form like what happened here. See what happened here. Can you see that this is the verified support, but the candle went below it? Look at what happened here as well, right? So it's possible that this thing can come down here. So what I would want to do now, first thing I want to do is, I'm on 1 hour. This is where the current candle is. What is the closest support and resistance? What is the closest support and resistance now? Right now, US 2000 is not even moving because the market is kind of slow. By 2:30 p.m., the New York session is going to open, right? So this is the closest resistance on 1 hour, and this is the closest support on 1 hour. My support and resistance indicator has already drawn out those areas for me. Thank you very much, support and resistance indicator. Thank you. What would I do without you? Now, so ideally, we're expecting something like this. I could link this particular low, or even this one. I could link it to this current one here. Try and make it to touch this low here. Touch it here, right? Because that is the recent low. I'm expecting, based on what has happened here, based on what has happened where? Here, right? What has happened here? What has happened here? What has happened here? I'm expecting the same thing to probably happen here as well. For the price to do what? To push up. For the price to what? To push up. So that means I should be looking to buy somewhere around here. Maybe somewhere around these areas. From somewhere, anywhere from here up to this place. So I'm expecting that the candle will reject. Now, another way I can probably check is by using my Fibonacci tool. Now, that one might be a bit tricky for you guys. Let me show us something. If you want to use a Fibonacci, you connect the recent low with the recent high, right? So if I also connect this, I'll connect from here. I'm doing it on the 1 hour time frame. I'll connect from this low, connect it to this high, this one here. And then this zone here is like where I'm expecting the price to bounce bounce from, and then start going up. So this 38.2, 50.0, and 61.8, these are what we call the golden zone, where you're expecting price to bounce from. Remember, we're taking those buy or sell from the 15 minutes time frame. but I don't really like to use Fibonacci. I use it sometimes, but I prefer to use my moving average and some other things and my RSI. I prefer to use RSI, a stochastic RSI, and my moving average. I really don't use Fibonacci like that because it can be a bit tricky for some of us to understand it. Now I'm going to add my moving average, right? Now look at my moving average on 1 hour. Look at it. Look at it. Acting as a what? As a support. When the candle is below the moving average is acting as a what? As a resistance. When the candles are above the moving average is acting as a what? As a support. Now look at the moving average here, acting as a support here. So this is like a support zone where price is, so it's possible that price might still come down here. Let me go back to that. Now, oh, sorry. So impulse, retracement, impulse, smooth, retracement, smooth, smooth, smooth. Now you use your trend line. So I could use my trend line to connect these lows. Now, it's possible that I've drawn my trend line like this, and the candle. So maybe I placed a buy somewhere here, only for the candle to go below my trend line. That can happen. It can what happen? So we want to check how we can address that particular situation when it happens. Okay. Now it's possible that this candle can go below this support and like go below it. I'm looking to place a buy somewhere around here because I'm expecting that the candle that this price will bounce off like it has done previously, right? It came to this place, then it bounced and bounced up. It came down here. It came down here, bounced up. Oh, there's another one here. There's a small one here. Came down here, bounced up, came down here again, bounced up, came down here, bounced up, came down, bounced up. It has come down now. But we don't know. You know why we don't know? You know why we don't know? I'll tell you why we don't know. We don't know whether this is the place. Because the reason why we are saying that all these places are what they are is because it has formed what we call structure. What is structure? This is what I call structure. Structure is, this is like a support. Then you have a bearish candle that has formed. Then a bullish candle now forms here. This is like a low. You have another bearish candle here. Then a bullish candle now forms. This is another low. Bearish candle. Then another bullish candle on a support. As long as a bearish candle forms and a bullish candle now forms, that is what we call a what? A structure. These are lows, right? So, and because the lows are becoming higher, you can say that the trend is what? An upward trend, right? But here, you can see that here, you can see bearish candle, you can see bullish. You can see bearish, you can see bullish. Bearish, bullish. Look at bullish. But here, we've not seen any bullish candle yet. Can you, okay, bullish candle is trying to form, but it has not fully formed. So the first thing I did was to draw my support and resistance on my what? On the higher what? Time frame, right? On the higher what? Time frame, which is my 1 hour time frame, right? Then I went, now I've drawn this is the current price. I've drawn the closest resistance and closest support to the current price. Now, what am I going to do? I'm going to go to a lower time frame, which is my 15 minutes time frame. And I'm also going to draw my minor support and resistance. Minor. meaning that it's possible that we still have support and resistance in between these two lines. So I'll go to 15 minutes. Now look at those two lines. Can you see? These are the two lines that I drew on 1 hour. Can you see them? On 15 minutes, there's a minor one here. So I will draw this one as well. Look at, there's another one on top of here. Here. I'll draw it as well. Right? Look at what is happening. Can you see what's happening here? I think there's one more here. There's one here too. Can you see how these candles are going up from here? Let me go to 5 minutes and see whether I can, if there are still some minor support and resistance here. I can decide not to draw it, but let me go to 5 minutes because sometimes I use 5 minutes. Okay, look at, there's one here on 5 minutes. Can you see? Can you see it? Look at on 5 minutes. See what's happening on 5 minutes here. Can you see what's happening on 5 minutes? Can you see? There's even a support, a verified support on 5 minutes. Can you see it? So let me go back to my 15 minutes. Now, how would I know I'm on an uptrend, right? I'm on an uptrend. Now, normally, I want to show us something. Normally, these are what I look out for when I want to buy or sell. If I want to use my stochastic RSI to buy or to sell, this is what I do normally. Now, this RSI on 15 minutes, it is still below 50. The RSI is below what? 50. Already, my stochastic RSI has already crossed in the direction of my RSI. It has already what? Crossed. But I want to show us something very important. Very, very important. I want us to get what I'm trying to explain here. I hope you can get it. We get it. I'm trying to get a picture to explain. Hold on, just give me just hold on, I'm trying to get a picture. Hold on. Or let me just use the charts. Okay, so I'm going to use the charts, right? I'm going to use the charts. I will use the charts. Now look at, please stay with me. Now I want us to know something, Look at, please, I want us to stay with me. Now look at what's happening here. This bullish candle has not gone above this moving average. If this candle goes above this moving average and closes above it, this RSI will go above 50. Don't worry, let me just show it to us. Look at what's happening here. Look at here. Look at what's happening here. Here. You see this thing? Once a bullish candle goes above this moving average, and closes above it, just know that the probability that the next candle will buy is very possible. So these are the three things that I'm looking out for first. This candle closes above the moving average, number one. Number two, my RSI goes above 50 at this point. And number three, my stochastic RSI crosses what? Upwards. Once it does that, just know that the next candle will at least go to the next resistance. There's a resistance. Say, look, watch this line here. Look at this line. Once it does that, just know that it will go, the next candle will go to the next resistance. I know why I'm saying that thing. I know why I am saying it. I'll show us why I'm saying it now. Let me go down here. This is an uptrend. Currently, we are in what? An upward trend. right? Because we've already established that. But you will see that the candle was going. Look at this candle went down here. Look at this point here. Here, this point. Look at it here. Can you see what happened? This is the support, right? After this candle closed, below this moving average, remember, this thing you are seeing here is a what? A retracement. What I'm basically saying is that when you are in an uptrend and there's a retracement, let's say there's a moving average here now. This is a moving average. And in this retracement, a candle closes below the moving average and your stochastic RSI is below 50, and your RSI is below 50, and your stochastic RSI is also crossing what? Downwards. This is a moving average. Remember, this is a retracement, not the main move. This is a retracement. We are looking for buys, but what we are basically waiting for, we are waiting for this. It has closed, so we are waiting for it to hit a support, so that we can buy from that support, which is what we are looking out for here. Here, look at it. It closed below. This candle closed below this moving average. Your RSI is below 50, and your stochastic RSI is also crossing downwards in the direction of the what? Of the RSI. Okay, look at it. Just explain this thing to us now. I'm explaining this. This is the moving average. This is a candle, because these things are candles, right? Moving average, bearish candle, and then another candle forms. This is a support. But remember, what I'm doing here now is what is happening here, and what I'm going to also show you in the chart. I'm saying that once that thing happens, we know that at least it will go to the next support. Look at what happened here. When this moving average, this one here, when it closed below when this candle closed below this moving average, the next one, there are 3 supports. Or how many supports are there? So it closed below the moving average. The first support is this one, right? The first support is this one, this one here. This is the first support. This one. Right? But what happened? What happened to that support? It broke the support and kept going down. Now, after this support, the next one is the trend line. After this support, the next support is the what? Is the trend line. So it broke this support. So now this is where we could have drawn our trend line. What I'm trying to achieve here with what I'm doing now is to know where I will link my lows. I told us that finding where we are going to link our lows can be an issue. I said it before, right? I said it. I said that we don't know whether this particular low now, this one, whether this candle will not still go down like this. Like go down. We don't know whether this is the low or whether it will still go down. That is what I'm trying to achieve by what I'm doing right now. Okay? So I'm saying that, I hope you're not getting this thing confused, right? Please, let's follow. Look at, from here on 1 hour, from here, all the way, listen, let me use the cross here. From here, all the way to this place is a retracement. But we are trying to know the likely place that this candle will do what? Push up from. That is what we are trying to know. Why? Because if you look before, it was, look at all of these lows. Before it was here, then it came here, then it came here, then it was here, then it was here, then it was here, then it came here, now it is here. I am saying that, look at on 1 hour here, look at the moving average. You see the way the moving average is. Look at it is below all of these candles. But if you go to 15 minutes, you will see where the moving average is here. Look at it here. Look at it. Can you see it here? Look at it. See it here. Look at it here. Now, this moving average closed below this candle, number 1. Number 2, let me draw a line there. Number 1, this moving average closed like it closed below this candle. Then the next candle now got to this verified support. There was a kind of rejection. Look at rejection here. Look at this look at this candle here. But that rejection could not hold. If the rejection held, I would have drawn my trend line like this from that downside. But look at what happened. It broke it. It broke the rejection and came down to form a lower low here. So I could have even still drawn it maybe down, maybe to this place, right? To connect, like that is just draw it from down, right? To connect this one, right? So what I'm saying is that once this thing breaks, once it goes like this and it starts to come down, what you are now waiting for is for it to hit a support. It doesn't have to do that every time. It does not have to do that every time. It has broken it. Look at, there's a support. This line here is a support. This trend line is also a support, right? So it broke this verified support, came down here. From this line, it pushed up, then it came down again, pushed up, came down again, and is pushing up. So it is looking as if this area might be a strong support area. And I said, when there's an impulse and your candle is retracing, like what is happening here, I want you to know that it is retracing from a support place here. 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 I hope you are following. I hope you are following. So basically, now for someone like me, for somebody like me now, I like to buy from a support area. If you see, you can see that there have been multiple rejections here. Rejection. Let's go to that's on 15 minutes. That's rejected multiple times. Some of us can wait. You can wait for this candle to close above this moving average. And when that happens, you will see that this RSI will go above 50. Your stochastic RSI has already crossed upwards. So you're probably waiting for the RSI to just go above 50, which is going to coincide with this moving average, with this candle closing above the moving average. But for someone like me, I like to, once this happens, once I see that this thing has happened, and this is where I've entered my buy. I've entered my buy here, from this low here, from here. Or I could have waited for it to close above the moving average. But for me, normally you are supposed to wait for it to close above the moving average. But for me, I'll enter my buy from here. I want us to see the bigger picture. This thing I'm showing us here, look at it on 1 hour. That is what is happening. That's what is happening here. We are just trying to guess. Remember, I said this is an impulse. This is a retracement. We are trying to check. What are we trying to check? What are we trying to check? Impulse, retracement, noise. We want to know at what point will it do what? Go up. It could have been from here. 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 So we want to know. And I'm saying to us that on this retracement, your moving average might be somewhere like this. Remember that you have gone to your 1 hour to draw your support and resistance lines. You've drawn your closest support and your closest resistance. Then you now went to 15 minutes to draw your minor support and minor resistance in between those two lines on 1 hour. Remember. So you have drawn the lines, right? There are lines, that support and resistance lines. Let us assume that there's a support here. Now, remember that you are on an uptrend, you're looking for buys. Maybe I was thinking that maybe if this candle hits this moving average, that the moving average will act as a support and push it up. But that did not happen. The candle broke the moving average, right? And closed below it. I am saying that I am expecting the next candle that forms. This is on 15 minutes. I'm expecting next candle that forms to at least to hit a support before I can look towards. So I'll just be waiting. I'll be waiting patiently for that candle to hit a what? A support. Either it hits my support or it hits my what? My trend line. If it hits my support and starts going up, I can look to buy from here. If it hits my trend line and starts going up, I can look to buy from there. That is what I am trying to explain. I hope you understand. Look at 15 minutes. It has been coming down from here. This is from here to this point on 15 minutes. Is the same thing as from here to this point, which is a retracement. Look at it here. Look at the candle trying to push. Can you see it trying to push? So I can probably go and place a buy. Place a buy here, maybe like 1, 2, maybe 3 buys. Then drag and put my stop loss below here. I'm supposed to place this buy on 15 minutes, sorry. Right? Put my stop loss here and leave my take profits open. Now, this untested resistance is going to be my, sorry. You guys can't see anything. See where I placed my buy on 15 minutes here. I'm trying to follow what is happening here, right? I'm trying to follow what, see? Can you see where I placed my buy? Can you see it here? This green dotted line, look at it here. Look at, it's like here, it's like here, it's like here, okay? Now, it's possible that this might hit my stop loss. If this candle now goes below and breaks this trend line, it will probably hit this moving average, right? So if it hits this moving average, that means it might form a new low. That is these things are called lows, right? Look at it. These things here. It might form a new what? A new low there. It might go down. This candle might go down. This candle might go down here. This candle might go down. Might probably come down here. Maybe come down to this part. What's happening here? Might come down here. If it comes down here and hits this moving average, that means that this low, you see all these lows, it might be a new low here, which is lower than. So what will happen is that I will now have to shift my what? My trend line. As long as my RSI is above what? 50 on 1 hour. Remember I said your RSI, as long as it is above 50, you are looking for your what? For your buys. As long as your RSI is above 50, you are looking for buys. But the tricky thing is, how will you know that this is the low that is going to buy? How will you know? How will you know that this low, look at that it is from this low that you will buy? How will you know that it is from this low that it will go up? How will you know? That is the issue. And I hope I've been able to explain it to us. This is for an uptrend. So we're expecting right now, market volatility is low. So we are expecting that by 2:30 p.m., there will be some kind of push. Let me go to US 100. Still, so let me quickly, based on what I have put us now, let me just quickly mark up my US 100. Right? Let me quickly mark up US 100. Now, if I zoom out, you will see that this is clearly what an uptrend, right? I can use my trend line. This is a low. Link it to this one. I linked it to this one, but we don't know whether these candles might still go down. It might still go down here. It might still go down here, right? We don't know. Some of us are asking questions. After the class, we'll have time for these questions, right? So the closest resistance and the closest support on 1 hour. Then next, go to 15 minutes. Look at those two lines that I drew on 1 hour. Look at, you will see minor, this is a minor resistance, minor support on 15 minutes, right? Remember, 15 minutes is your entry time frame. Okay, now let me add my moving average as well. Look at, can you see my moving average? Can you see it? See how it is resting on this trend line. Can you see it? Look at, it is possible that this thing might go below it. Right now, it is good for us that these candles are above. So, and look at, your RSI is above 50. The stochastic RSI is also crossing upwards. What I am saying is that if a candle was going below, let's say this candle now was coming below this thing here. If this candle on 15 minutes, if this bearish candle, if the candle had closed below this moving average and this trend line, I will be what? Now I want to ask this question. I also want to help us. This is a retracement. I hope we know. It has gone down. The candle has gone down, went up, and then it was going down at some point before it started going up. Now, I'm saying that if this thing went down, this particular candle, this candle here, this candle, if this candle had gone and closed below this moving average and this trend line, where will I be waiting for? I'll have to wait. So at what price will I wait? I'm saying if this thing was not doing what it is doing now, imagine that this candle was like this. The candle closed. What's happening? Why is this not responding to that? I'm saying imagine that this candle closed below this moving average, and then another candle is forming. I want to ask us a question. What are we to do here? Remember, as long as if I go to my 1 hour and check, and this RSI is still above 50, but this necessarily is going down. I want somebody to help me now. Where am I supposed to wait? Where should I be looking? I want someone to speak. I want someone to talk. I want someone to talk. Like I want to hear, so that I know that I'm not talking to myself. Where am I to wait? I want somebody to talk. Stay fine. You raised up your hand. Fine. Oh yeah. Speak, Mr. Fine.
Okay. You wait until it gets to the closest support line.
Where is the closest support? That is 1515.
Okay.
Here, right? Here, right?
Yeah. Yes.
This is right?
Yes. Yes.
Okay. Now let me go and check on 1 hour and see. Can you see? Can you see it? Can you hear me, Mr. Fine? No, unmute, Mr. Fine. Mr. Fine, you can unmute.
Okay.
Can you see? Can you see it? Can you see it here?
Yes.
So that will mean that I might now have to maybe adjust my trend line to come to that place, right? Stephanie, I've not, don't unmute. Just I want people to understand what I'm saying. Don't unmute. Just hold on. Right, Mr. Ifeanyi?
Yes.
Remember,
I'm with you.
What are we trying to do? I am saying that the trend is like this, but the problem is to know because when this thing is going like this, it can do from here, or from here, or from here, or from here. But one thing we know for sure is that if it is going to do like this, it to do like that from a what? From a support.
Support level.
Either the support is a moving average, or is a trend line, or is a horizontal support level. If it is going down, right, and it retraces, and there's a moving average here, and it closes above the moving average, on the next candle, if there's like a trend line here, closes above moving average, closes above trend line, if there's a support here, we are waiting for it to hit that support. We know that retracement, each of these things will either happen at a support or at a what? Or at a resistance. We know that one for sure. Do you understand? So that is actually what we're waiting for here. This is kind of tricky now. I don't even want to trade. I placed a trade on US 2000, but I'm not even supposed to place a trade on US 2000 because why? Because I should place this trade during, let's say, the New York market session, because you don't want to be placing a trade when the market is ranging. Look at what has been happening here since. Look at from here. I think somewhere from here, the market has been ranging.
The whiteboard, please.
Oh, my whiteboard is showing.
Yes.
Look, the market has been what? Sideways. You want to trade when the market is ranging like this, up or down. Not like this, not sideways. You can't make money when the market is going sideways. You want it to be going either upwards or what? Or downwards. Do we understand?
Yes.
So this trade that I place, I'm not supposed to place it, but I can probably leave it until 2:30 p.m. and see whether the volatility from the New York market session is going to do what? Push it what? Upwards. So what I'd have done was probably to wait, let's say 2:25, maybe 2:25. By 2:25, that is maybe some minutes to 2:30. Well, I've heard this. What I just did now, I could have placed it by 2:25. But why I probably placed it now was maybe because the price, not maybe, because the price is near the support. But look at what is happening. It will go up, it has gone up, then it has come down. See, it went up, then it came down towards that support. So it's possible that this thing will just be ranging towards that support region until 2:30 p.m. Right? It can be ranging. Look at this is not good. See how this thing is doing. This is bad for business. You can see it is sideways. That is not what we want. We want something like this. Yes, we want something like this, like a step. That is what we want. Something like this. That is exactly what we want. We don't want it to be going what? Sideways. So you want to trade in the market when the volatility is what? Is high. If the market is not really, if the candles are not really moving, just avoid it. Don't trade it. Just leave it. Right? Do you understand? Okay, so I don't know if I was able to explain this. So I'm going to leave I'm going to take out some time for your questions. So if you want to ask questions, you can ask me, because I've been the only one talking. I don't know what is, what you guys are thinking, but you can ask me questions now. So if you want to ask a question, just raise up your hand and then I'll see how best I can answer the question. Questions. Okay, Mr. Samuel Okon. Yeah, Mr. Samuel, you are unmuted. You can ask the question.
Like this, I sincerely want to say a very big thank you for this. Right, it doesn't come in. It's a kind of lesson one doesn't get for a very long time. Okay, so but I got confused at some extent. Right, I wanted to know something during the course of the market and the news. Right, if for instance, when you open the trade to check what is happening at the market and you see it's an uptrend, and then the news now comes in and the reverse is now the case, are you saying after some time the market will go back to its original state, which is the uptrend? That's one. Then secondly, I would like to know how can we be able to get some of these you made mention of stochastic RSI, you made mention of support and resistance, you also made mention of moving averages, and the likes of others. When you combine all of this, this was how you were able to get what you're explaining to us. Now, how can we be able to put all of this up? Is it something that when we check our system, we can be able to get it ourselves or from our phones as well?
This is like an indicator that we have here at Rally Trade, right? So once you fund your account, you can speak to your account manager as you fund your account. Now, this is actually a VIP indicator, right? Ideally, you should fund at least one M to be able to get this, but let's say from 600K, 500K, you can get it. So you can just speak to your account manager.
Okay, that's fine. Then additionally, I would like to please beg the management or you and the rest of the other colleagues, if we can be holding this session, even if it's once in a month or twice in a month, it won't be out of place. You are empowering us like this. Maybe you get to see the benefits at the nearest future, but you are currently empowering us like this. So I wouldn't want it to be a one-off thingy. I would want us to bring it on board and it comes to stay for a very long time. I still have other questions, but let me give room for others.
Okay, no, wait, hold on. So is it this particular or like trainings generally? Because I know we do trainings.
No. This very one you just made mention of. In fact, this session we just had, I know we do have trainings, right? But this is like taking somebody to the stream and teaching the person how to fetch. So with or without you, after this person has been able to acquire this knowledge, the person will be able to fetch without you being there. And the person can still be able to go back and say, yes, it was during the course of this training. We had somebody who taught us. This was how we were able to get this knowledge. So that's my point.
All right, no problem. You can just maybe so what you just said now, you can write maybe, I don't know how, like to your account manager, just send it like an email or like a voice note. So probably he can table it when we have our meetings. Do you understand?
That's fine. Thank you very, very much.
But stuff like this, I'm sure we'll do them from time to time. And then I think this is going to be recorded as well. So you can always go back and, because what I just did now, you might not learn it once. Practice. It is practice that makes perfect. If you do it time and time again, that's how you get better at it. Do you understand?
Then thirdly, you never said something about the type of candlesticks we all need to be looking out for, because I know they also play a major role in some of this entry and the I don't know.
Yeah, well, for me, yeah, you can look out for candlesticks. For me, yeah, for example, I know about bullish and engulfing, bearish engulfing. I know about hammer and inverted hammer. Those are like the 4 candlestick patterns that I look out for. Like, look at what happened here now, for example. Look at this. Can you see this? Can you see this inverted hammer?
Yes.
on
Yes.
this moving average. You can see what I was saying. This candle has closed below this moving average, right? I'm waiting for, so this next one is looking, is either it hits where this trend line number 1, or number 2,
Yes.
it hits this verified support. So those are the areas that I'll be looking out for it to do something like this, like what has happened here. You can see what has happened here, right? Came here, went up, came down to this support again, went up, came down again, went up. Now it's trying to come back down again to that point.
Okay.
So that it rejects from this trend line or from this support. But I know that okay, as long as my RSI on 1 hour is above what 50,
yeah,
I am looking out for what? I'm still looking out for that buy, right? And I'm sure I explained to us how that buy looks like. When I like I was saying, like for the sell now, I use this straight line to align the 3 criteria. That once this happens, if you're on an option and this happens, just wait for it to sell, because it's going to sell. This candle has broken this moving average. The next one is going to look for the nearest support to bounce off from. So this candle has closed below this moving average. The RSI is below 50. Your stochastic RSI is also crossing what? Downwards. That is if this is a retracement on an uptrend, right? If it was a downtrend and it was retracing upwards, look at something like this. Can you see? Look at something like this.
Yes.
Can you see it?
Yes, yes.
The RSI is the moving average has gone above 50. This was the closest support. Sorry, closest resistance, as at here, this line here, right? You can see that after it closed up, bullish candle closes above the moving average, RSI above 50, stochastic RSI crossing upwards, just like this one. Crossed, came down to the nearest support. This one, I'm just saying, just in case it's a different trend, right? So if it's on a downtrend, you know that once it is going up and there's a moving average and it closes above it, on the next candle you're waiting for the next support to know areas where you're likely to do what? Sell from.
Yeah.
Right?
Okay.
So
thank you very much.
You can see this. Yes, that's gone up, crossed RSI above 50, gone up. It definitely went to the next support. Right? But this is an uptrend. I was just trying to explain. This is an uptrend. That's why it kept going up. If this was a downtrend, a support somewhere, maybe something like this now, we'll start pushing it down. Okay. All right. Another okay, ATQ. So for ATQ.
Yeah, okay. Good afternoon. Good afternoon.
Yeah.
It has actually been a very educative session. A question I would like to ask is the moving average you are using. Is it 50 or 21 for this particular analysis?
It's 21, but you don't even need to know what you need. You just, everything is all in one. You cannot just get the moving average and just work with, like, all of this RSI, stochastic RSI, trend line, support and resistance, they all go together. So you can't just work with only the moving average. Do you understand? Do you understand? Mr. RTQ, I can't hear you again. Can we see what is going on here? Look at what is going on here. Remember, I drew my trend line, and I pointed it to this particular low here. But look at what's happening here now. There's a new low. Remember, I said, look at this moving average has crossed. Sorry, this candle has closed below this moving average. My RSI has gone below 50, and my stochastic RSI is trying to cross downwards. I told you that once it does that, it will try to go to the next support. The next support here is either this trend line or this support region here. That is where to be looking to go to. But if I go to my 1 hour as long as my RSI is still above 50, I know that I'm still looking for what? For buys. So when my RSI goes below 50, then that is how you know, okay, oh, and that will coincide with this moving average. The candles will now go close below the moving average. You know that it's now time. It's as if the bulls have had their own time. Now it is time for the bears. It is now what? A downtrend. It means that something like this is about to happen. Something like this. Something like this. Yeah? That is when something like this begins to what? So it now goes from an uptrend to a what? A downtrend. Okay. So another reason, I hope I answered the question that somebody asked. Who else? Mr. Richard, Mr. Champ, Mr. Champ, Mr. Champion, Mr. Champion.
All right. Thank you so much, Mr. Julian. We really appreciate you. God bless you, sir. Please, just two quick requests. Number one, please, can you give us this recording? Please.
Yeah. It was being recorded on. You're going to. It's being recorded. So
yes, please. Thank you. At least thank you for what Rally Trade is doing. About 80 of us are here. And then secondly, like somebody was trying to raise, I believe, a question. These moving averages, like somebody was asking which figure are you using, 21 or thereabout. Then my question or clarification is that at times we also hear of exponential moving average 18 or 50. So at this stage now, I'm just wondering which one can we stick to? Because I've seen so many rally trade lecturers telling us about exponential moving average 18 and 50. And now we are talking about just moving average. Do we just stick to
let me show you something. Let me show you something. Let me show you something. So different moving averages work, they all have their uses. For example, if you look at what is happening here, this is a tool that I use. Let's say I want to check the trend, right? I want to check the trend. If I come down here, it's showing me that US 2000 is on a what? Is on a bullish trend, right? Trend strength. What is the current trend direction of each stock market index? If the index is plotted on the left side, its trend direction is what? It's bearish. And the closer it is to the lower left, the stronger its bearish trend. Look at, it's using this moving, it's using 20 simple moving average 20 or 5. If I scroll here, there are different moving averages. Here, there are different moving averages. So you can use different averages. It depends on if you know how to combine them, right? You need to know which one is which one. You need to know which one is which one. Okay. So look at now. From this now, you can see that this, like all of these ones are in an uptrend. They are gaining strength. They are going up. US 2000 is kind of, it's just as if it's just shifting between up and like uptrend and downtrend. But what it is actually from here, this is just a strength, not trend. This is the strength. This is the trend. You can see US 2000 there. You can see it there, right? So people use different moving averages to determine what their trend is, right? It's like saying that people can, a football club can have different strikers with different qualities to still achieve a particular objective. Your striker does not have to be a particular type of striker. I hope I made sense, sir. I hope I made sense, sir.
Yes, you do. But this one you are showing us now. I'm just seeing it for the first time.
21. Which one? Oh, that one.
This trend matrix. Which site is this one?
Market. Let me send it here. Let me send it on the chart. See, sometimes we want to do all these things. That's why I said I've sent it on the chart.
Okay. All right.
Yeah.
All right.
So
Thank you.
I think yes. You're welcome, sir. So, Mr. Richard, I think I'll take like 2 more questions and call it a day.
Hello.
Yeah.
Thank you very much for the lecture.
You're welcome, sir.
The moving average. My question is this: moving average, the RSI, and the stochastic RSI. They are together as a software, right?
Yeah, they all come together
as a software.
Okay.
So we need to contact our
account
manager to get it.
Let me tell you, yeah. Now, no, like you have to fund your account. Let me tell you. Let me say something. It is easier for it is easier for you to fund, let's say, 1M and target, let's say 30K per day, than for you to fund 100K and target. Well, if you are funding 100K, maybe you have to target a little amount of money. So what some of us do is let's say we fund 100K or 200K and we want to make millions, right? So I want to make millions with 100K. It is easier to have a million. It's easier to have million in your account and say you want to make a couple of thousands per day than to have thousands and say you want to make a million. I don't know if I'm making any sense.
Yes, you're making sense.
Yes, like it's pure mathematics. If you check it logically, somebody who funds their account with 100K and say, let me see if I can make a million by end of this month. It is easier for somebody who has 1 million to say, let me going for 20K per day. Let me go for 20K per day. In 5 days, that is 100,000. It is easier. It is easier. I have a couple of clients here. There's a client who has 5 million in his account in a month. See, a month? Yeah. I think a month, 500K. A month. So if you divide 500K by 31 days, you know how much he's looking to make in 1 day. 500K in a month. But some of us who fund 100K, we want to make 500K at once. Some of us will play straight. Maybe you make like 200K. That's not, is that, even though you made the 200K, that's not what you are supposed to be doing, because you're just being greedy. You fund like a million and you target like 20K per day. That is how that is the most logical way to go about this stuff. Fund higher and target small amounts, not fund small and be targeting one crazy amount. I hope I answered your questions, Mr. Richard.
Okay. Then one other thing that I would like to ask you. Some of us came late. Before you round up, we just want you to summarize everything again so that we can grab something meaningful.
Well, this thing is recorded. I can't see. The thing with me is I don't know. Summarizing is I like to explain things in detail. When I was explaining this, I was repeating things. This class started by 12. This is 1:32. Okay. 12 to 1 is 1 hour. That's 1 hour 30-something minutes that I've spent trying to. I've explained some concepts time and time, and this thing is recorded. So once we are done, the recording is going to you ask your account manager. The recording is going to be sent to you, then you can watch it.
Okay, thank you.
You're welcome.
Yeah.
So 2 more, Mr. There's no lady. No lady has asked me any question. Is there any lady here? Mr. Frank. Okay. Mr. Frank Umekedu. Mr. Frank Umekedu.
Can you hear me?
Yeah, I can hear you. I can.
Okay. Almost the same thing that the previous questionnaires have asked so far about the moving average. That is the details of the moving average, because it is the detail actually that will help us to figure out exactly what it is and how to get the whole thing set and align it with the ROSI and the stochastic, like you pointed. That is it. Then secondly, I don't know how this video can be made available. Just almost the same thing that the previous
Yeah,
questionnaire.
a YouTube link is going to be, and the thing was even being streamed on YouTube, but you get a YouTube link will be sent to you guys very soon to watch it.
So the details of this moving average actually is necessary for us to get through. Is it exponential? Is it simple? Is it
It's
light?
smooth, but yeah, you seem to be concentrating only on the moving average. Yeah, it's moving average. Everything that does not, these things work together with each other. There's moving average, there is RSI, there's stochastic RSI,
Yeah.
there's trend line. So there's support and resistance, you know. Do you understand?
Yeah. Yeah.
So it's not just moving average. It's not just the moving average.
And your resistance and support indicator, is it applicable to mobile system too?
No. These things, if you're using a phone, your trading is limited because phones have limitations, like maybe like the screen of a phone is not much. The indicators, most of them are designed for laptops. There are some indicators on phone, but the major ones are for laptops. You know, like there's some things that you cannot do on a phone that you have to do on a laptop. If you are in a radio station interviewing a celebrity and maybe you want to play music, maybe like they're in a radio station, like, you know, they play music from time to time, or they do jingles. You don't do jingles with a phone, you do it with a laptop or a computer. There are some things that you cannot just do. A phone is mostly for entertainment, you know, because you can lie down and go. So laptop, it has to be on a table, like you set it up like a. If you go to banks don't use, if you want to withdraw, banks don't look at the phone to tell you, man, there's a laptop that has very strong processing power. Do you understand?
Yeah.
So you need to get a laptop. So you do this, then you can use your phone and just be monitoring. I use phone just to monitor trades mostly.
Please help us with the link to the video.
No problem, sir. No problem.
Thank you.
All right. So as after me, I think there's a Mrs. Ukamaka. There is Mrs. Ukamaka. I can't see her again. After Mr. August Natam, I think that will be it. Mr. August Natam. You can unmute yourself, Mr. Augustine. Oh, Mrs. Ukamaka, I just saw her now.
Yeah, hello?
Yeah, I can hear you.
Though you've taken care of much of my question, but I just want to appreciate you for this expository class here. What I want to really understand is the concept of this stochastic. Basically, apart from the RSI and the other one, you know, are you saying that when, assuming you are showing us the chart now, assuming when the stochastic is separating itself from that's the green color, the blue color, is separating itself from the red color going up, while the RSI is still on top of that 50, is above 50. It means it's still in an uptrend. So that's what I want to.
Like look at if I go on 15 minutes now. If I go on 15 minutes now, look at something like this. Look at something like this on 15 minutes. Look at.
Okay. Yeah. Okay. Okay.
Can you see?
Yes, I can. I'm there.
RSI, moving average. Sorry, candle has closed above moving average. Number one. Number two, RSI is above 50. Number two. Number three, stochastic RSI is trading in the direction of RSI. Look at the look at RSI like this.
Yeah.
Stochastic RSI also in that same direction.
Okay.
So look at this. This is the next candle, right? Sorry, or the next resistance. You can see that after it's included, the next candle went reached that resistance.
Okay.
Abi?
Yes,
so I was trying to explain that thing about, you're in an uptrend, but there's a retracement, right? There's a retracement in the uptrend, but that retracement, if you go and check it in 15 minutes, you might see that a bearish candle has closed below the moving average. The RSI is below 50, and the stochastic RSI is what? Crossing downwards. If that is happening in an uptrend, when we should be looking for buys, that means we are waiting for a chance to buy, Abi. Abi?
Yeah. Yes.
If that happens, that is like somewhere here now, like I was saying, like see, like here now. Look at what is happening here. Look at it. Perfect. Look at it here. Look.
Yeah.
Or let's even say this particular candle. Can you see it?
Exactly.
So what are we waiting for now? What are we waiting for? We're waiting for the candle to get to the nearest support.
Support. Yeah.
Which is this one, this 1917.5. This one here.
Exactly.
Or this region, because a support is not just a line, but a region. So that means if I go on my 1 hour, although my RSI is bending as if it wants to go below 50. But this 50 might reject and to start pushing up. And that might lead to this candle also to start going up as well. So now that this thing has passed below my trend line, I can now even adjust it. And adjust my trend line to come and stay here now.
Okay.
Abi?
Yes.
Can adjust it now. As long as my RSI is still above what?
50.
I don't know if you understand.
Yeah, I do.
Don't worry, you don't understand something once. You understand something by doing it repeated. That's how you learn. You learn by repetition. You learn three steps to learning: observation, imitation, and repetition. You observe, you imitate, and then you repeat. Yeah, I can hear you. I can hear you.
It means if I have access to this RSI stochastic strategy, I can still use it to trade in my demo. That is, if I have access to it.
You can.
Okay, thank you.
You can, but you have to, like I said, you have to fund at least.
I know.
600K, 500.
No problem.
All right.
Okay, thank you so much.
All right, Mrs. Ukamaka. So, you're welcome. So you can unmute yourself. Mrs. Ukamaka is going to be the last person. If there's another lady after her, I would, but there's no lady after her. I will call it a day. I've been here for so long. Mrs. Ukamaka, you can ask. Unmute yourself now.
Good afternoon, sir.
Good afternoon. How are you doing?
I'm fine, sir. So please, I want to ask, like NZD-JPY, the RSI is above 50 in 1 hour time frame, above 50 in 4 hours time frame as well. But from what is happening currently now, the market is moving downwards, like
bearish. Wait, is it USD-JPY you said?
NZD, that is New Zealand. NZD-JPY.
NZD-JPY. Let's check. NZD-J. Okay, let's check.
Yeah, the 4 hours time frame is above 50. The 1 hour is also above 50 RSI. And the market is going downward. So where exactly will I?
The thing now is that, yeah, this is, well, look at this stuff.
Yes.
Let's, from here now, from here, right? Somewhere here. If I was to draw this, let me draw, this is the closest support. Let me go to 15 minutes and check. There's a resistance here. Although it's not, if, like I said, if you want to trade, make sure that what you're trading has like that the market is ranging, because this market is noisy. You don't want something that is noisy. So here, from there, just go up. Now we don't know whether this is where the low is going to be. We don't know. We don't know. Let me add my moving average. You can see that it's trying to break it, right? Look at my RSI is below 50. This one is short. If this it remains, this is 15 minutes. How many minutes is it remaining for it to close?
1 minute.
40 something seconds. If this candle closes below this trend line, it's possible that it's going to get to this verified support, right?
Okay.
If it closes below this trend line, a new candle might form and get to this support. Once it gets there, if I go and check my 1 hour and look at this candle is touching 86.870, Abby. If I go to 1 hour, look at 86.870. 86.870. What can you notice? There's a moving average acting as a support, resting on that line. Resting on that line. See, can you see that it has broken it? It has broken it, right?
Yes,
now
sir.
look at what is happening here. Look at the candle has gone below the moving average. RSI is below 50. This one has crossed downwards. So it's looking likely to get to this verified support before it starts before there's any likelihood of a buy, right?
Okay. 4 hours time frame too is still above 50.
Yeah, I use 1 hour and then 4 hours is still, that means we are in an uptrend, right? Although this is not, I don't even know why you trade, because look at, there's so much noise. I don't think you should be trading something. Look at all of these weeks. Too much noise in this. You want instruments like this that don't have, look at instruments that don't have any noise. Can you see how this thing keeps breaking? How it keeps breaking where I set this thing here before. It has broken it. It's going down. On 1 hour now, look at RSI trying to go down. If it can break below this moving average, then you know that uptrend is gone, and then you're looking for sells or a downtrend.
Okay.
Right? So, all right. Thank you so much. And we can't learn this just by what we just did here. That's not how that's not you. Like I said, you learn by 3 steps. You learn by observation, imitation, and repetition. You have to observe what is being taught. You have to imitate what is, and then you have to repeat. You do it multiple times, right? So by 2:30 p.m., hopefully the market can begin to climb up. Thank you, guys. Can't take any more questions. If you have any questions, you can probably just ask maybe your account manager. If they need to ask me, they can ask me, and then I'll just explain it to you. But for now, this particular class is ended. Thank you, and have a nice day.
Okay.